You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. It is time, once again, for TWIFO, This Week in Futures Options, a program where we break it all down on the futures options side of the fence. Going to talk probably energy, equities, maybe some ags or rates or metals, or never know what's going to make it on to the program. That's why you got to tune in every week to find out. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever compelling, ever insightful, at least we hope so, Options Insider Radio Network. Reminding you, if you like what you hear, TWIFO, anything else we do, the nearly dozen programs that hit you on the network all the time. Keep rating and reviewing wherever you get these shows. It really does help the onslaught of new listeners discover the content these days. Keep sending in those questions, too. We do love to hear from you guys and gals out there, particularly for a show like this. I know these markets are new to a lot of you. A lot of you are just starting to kind of make your fledgling steps out there. You probably have questions about how these things work, so keep hitting us up. We do love to hear from you guys today. And let's see who we're hearing from on the old program today. Our good buddy, Mr. Sean Smith, the Managing Director of Derivatives Licensing, is usually holding down the FTSE Russell hot seat with me here on the old show, but he is out on assignment. I am pleased to say, though, we have an able stand-in to hold down the hot seat in his stead, Miss Catherine Yoshimoto, the Director of Product Management over there at FTSE Russell. Catherine, welcome back to the FTSE Russell hot seat. It has been too long.
Thanks, Mark. I'm glad to be here.
All right, Catherine, let's kick it off the way we always do. It is time for our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. This is where we break down everything that's moving to the light side, aka the upside, and to the dark side at CME this week from an underlying and also from a vol perspective as well. Catherine, this is where I usually toss it to Sean and I allow him to pick where we begin our journey. He pretty much always says light side, so he's pretty boring. So I'm going to give you that same opportunity to kick off the show this week, Catherine. Where should we begin our journey? To the light side movers, aka the upside, or to the dark side, Catherine?
Well, last time I started with the dark side, so I'll start with the light side this time.
All right, mixing it up a little bit out here. To the light side we go. It is a mostly dark side week out there. I haven't seen one of those on the radar in a while. I'd say roughly 2/3 of the names we scan here, listeners, are in the red this week and about a third in the green. For our top 5 to the upside we go. Our old friend Class 3 Milk back in the upside movers category, up exactly 3% this week. Number 4, Platinum, back in the metals out there as well, up about 3.5% this week. Number 3, soybean oil, up 3.81%. It was number 2 in the same direction last week, up almost 8%, 7.99%. So a good couple of weeks for soybean oil. Number 2, RBOB, up 4.11%. It was number 4 in the same direction last week, up 5% exactly. So it's been a good couple of weeks for RBOB as well. Number 1, interesting one. We haven't talked about this in a little while. Iron ore, up 5.51%. All right, now let's turn to the dark side. Number 5 to the dark side, going out to the ags. It's wheat, off about 3.35%. Number 4, feeder cattle, off almost 3.5%. Number 3, KC wheat. So staying in the wheat complex there, off almost 4.5%, about 4.46% there. Number 2, copper, back to the metals, off just a tick under 5%. It was number 1 in the other direction last week, up 9.22%. So interesting couple of weeks out there for copper. And staying in the metals category for number 1 to the dark side, it is silver, taking, let's say, an aggressive rest this week, off 5.87%. So a lot of action out there in the metals this week as well, with platinum, silver, and copper all landing on our movers and shakers report this week. Let's go out to the volatility front out here this week. And the declining spot, a lot of it's pretty much Eurodollars out there. Once you get beyond that a little bit, you get to Bitcoin. The Bitcoin 30-day contract is off 15% from a vol perspective this week. And you know anything about crypto, you know. Those vol levels, they got pretty inflated during some of that mad dash from 50,000 back down to nearly 40,000 and back up again. So it's hard for those 160, 170%, nearly 200% volatility levels to be maintained. And it's going to come in a little bit. We're seeing that in Bitcoin right now. On the vol advancing side, it's a little bit quieter week out there. The number 1 advancer is 30-day lumber. Don't talk about lumber a lot, but 30-day lumber, I think we have a listener question maybe about that a little bit later as well. Up about 4.25% from a vol perspective. Remember, this is this week. Then number 2, we have the 90-day peso contract, up 3.5%. And the palladium 30-day contract up about 3%. So there we go for the advancers and decliners, aka the movers and shakers report. But we have Catherine joining us today. A lot of action going on out there in equities land. So I think we got to hang our hat first and talk about some equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the equities section, and it's kind of top of mind for a lot of people again today. The equities have been moving. It seems like Powell kind of set people off into a bit of a tizzy out there with his comments today, because the markets had been selling off to kind of unched, and then once he started speaking, the things really turned darkly to the red. The NASDAQ was off over 3% at one point, S&P off over 2%, Dow closing in at a similar percentage. Seemed like they've rebounded off their lows now. NASDAQ off about 2.5%. S&P off about 1.75%, and the Dow off 1.6% coming into showtime. But still, a lot of action to be found in the equities. And of course, talking equities, you got to talk volatility. So let's start there. Coming into showtime, our good old friend RBX, aka the VIX of the Russell 2000, aka the VIX of the small caps. You know it's elevated. You know it's frothy. It has been for a while, and it still is threatening a 40 handle coming into the start of the show today. It was at 39.5. If you're listening to the show for a while, you know it's been impossible for it to break below 30 for the last few months, certainly since November. And now it's threatening to break 40 to the upside, up 3 points from our show last week. So small cap vol getting frothy. VIX also in a similar category. Coming into showtime was at about 31 3/4. That puts it up about 4 points from last show. And to put that VIX to RVX spread, aka the small cap to large cap vol spread, at about almost 8 points, 7 3/4 points. It's actually a little bit tighter than it was last week, about a point tighter. It was 8 3/4 points last week. And of course, VVIX, which is the vol of all things volatility, at about 124.5. That's actually about in line with where it was last week, up about a quarter, which shows how frothy volatility was last week on the show as well. It's a pretty high level to maintain for a week. And of course, the NASDAQ at the money vol, aka VolQ, aka the newest addition to the product suite from a vol perspective over there at CME, at least from a tradable vol perspective. CVol, obviously not tradable yet. 33.5. That's up 3 points from last show. And again, when you're seeing the index swing 3% in a day, that's going to contribute to some vol. That also puts that VIX to VolQ, so aka that S&P 500 to NASDAQ vol. Again, not quite the same thing because VIX has the skew and obviously VolQ does not, but it's still a worthwhile frame of reference to keep an eye on. It's about 1 3/4 points, actually tightening up. So NASDAQ vol remains frothy, but I think VIX is catching up a little bit today, so that's kind of why that spread has tightened up. So a lot going on in the equity vol space. Catherine, also a lot going on in the world of all things small caps. I know this is usually the time of year when Sean starts to get a little bit excited because you got a big event coming up on the radar there in the near future. But of course, you folks over there, Russell, have also been making some changes and some new additions behind the scenes as well. So catch us up, Catherine. What has been lighting up your tape? What are some of these new tweaks and new additions you guys have been making over there to the FTSE Russell landscape?
Yeah, absolutely. So Russell 2000 is part of our Russell US Index series, and we have as part of our regular maintenance and review schedules the quarterly IPO inclusion. So the big event you're talking about is the Russell Reconstitution coming up in June. But before then, on a quarterly basis, September, December, and March, we add eligible IPOs to the Russell US indexes on a regular basis. So after the close of February 26th, on that Friday, we announced the new IPO additions that will be getting added to the Russell indexes after the close of March 19th. So third Friday is when our quarterly IPO additions occur. 50 IPO additions were announced. Well, initially, I think that there was an initial list announced, and then, as we get feedback, it will get tweaked. And so as of yesterday, 50 IPO additions were on the list, 11 slated to join the Russell 1000, the large cap index, 33 slated to join the Russell 2000, the small cap index, and 6 in the micro only index. There is a heavy biotech focus with 16 out of the 33 Russell 2000 and 23 of the overall total 50 IPO additions in biotech. The Russell 2000 additions, including those 16 biotechs, there's 22 healthcare, 3 tech, 3 financials, and then 1 each in energy, consumer discretionary, consumer staples, real estate, and industrials. So again, heavy healthcare, biotech focus. This has been the theme for the Russell 2000 index over the past year. Healthcare remains the largest weight in the Russell 2000 index, about 20%, or is expected to be as of the March 22 open after the IPOs get added. Technology remains the largest weight in the Russell 1000 index at 27%. So there's been a big differential. The Russell 2000 still has about 12% in tech, but the Russell 1000 has been heavily weighted in technology. That differential has been, driving some of the differences in performance between the Russell 2000 and Russell 1000. Again, healthcare leading the charge for the Russell 2000. I'll also drop in a new product, highlight the Russell indexes. Because of this large overweight in tech in the Russell 1000, some of our clients have been wanting a capped version. So we just launched last week Russell US 40 Act daily capped indexes. So what that's referencing is the 40 Act SEC requirement for 525. The indexes cap the weight of securities over 4.5% at 22.5% to remain under that diversification rule. So very excited to be able to launch this new product for those managers looking to reduce some of those top tech weights, especially that have been driving the Russell 1000 index.
Well, Catherine, we've been hearing a lot of interesting narratives. Obviously, Russell 2000 has been kind of dominating the mind share of late. So even if you weren't on the show with us this week, I think we'd be talking about it anyway. We've had so many people writing in, so many of our hosts and contributors putting out content, talking about different trades and ideas and setups and the volatility just in general of all things Russell 2000. One of the interesting narratives we've been hearing a lot on the equity side of the fence of late is just the record number of IPOs. And you think, given all the, the highlights of the year from a macro perspective that we saw last year, that wouldn't be the case. Of course, pandemic, high volatility, everything else, not exactly really conducive to a strong IPO market, yet the equity volatility, or I should say the equity valuations, really just continued to rally all throughout last year. And that really drove a lot of new companies to decide, hey, let's take our chances by going public and take advantage of some of this liquidity. And it seems like you're seeing that represented here in the Russell 2000 as well, Catherine, because last year you had 20 new IPO additions at this time in the first quarter of 2020. And this year so far, as you mentioned, 47, closing in on 50. So more than double, Catherine, the number of new IPOs hitting the Russell 2000. Is this a record? And are you surprised that you saw this many new IPOs, or maybe given what we've seen from the end of last year, and were you kind of expecting these numbers?
You bring up an interesting point. IPOs did dry up a little bit last year. At June reconstitution, it was unusually low at 6, and then it increased steadily. September is 46 total, 30 in the R2, 50 total, and 39 in the R2 for December. And then now we're looking at in the 30s for a total of 50 for the Russell US indexes. I actually happened to just pull 10 years or so just yesterday. It's actually not a record. The record, I believe, was in 2014 when the Russell indexes added 62 IPOs overall. But the high for the Russell 2000, though, was, it was a little before that. It looks like it was, may have been 45 in December 2013. So, definitely IPOs are the regular quarterly IPO additions are a part of the Russell Index's story, that we regularly add these eligible securities. That's not to say every single IPO gets added. They still have to pass the eligibility screens. I'll mention, Zoom might be a good example to highlight in the sense that it IPO'd in April 2019, but didn't pass voting rights. So it actually didn't join the Russell indexes until 2020 at reconstitution. So, that just goes to show the importance of these regular additions, the quarterly IPOs, and the IPOs don't make the eligibility rules at those quarterly opportunities, and they still have a chance to potentially be added at Russell reconstitution, that full annual rebalance in June that occurs across the Russell US indexes.
Speaking of that rebalance and indeed the upcoming big event, you kind of alluded to the Russell reconstitution. I don't want to steal all of Sean's thunder because I know he's going to want to talk about it when he comes back from his much deserved vacation there. But you have some big days on the calendar coming up. Why don't you break down the upcoming Russell 2000 and indeed the recon calendar for our audience here, Catherine?
Yeah, absolutely. It is, I believe, one of the top 10 volume days in the market for the Russell reconstitution. $9 trillion in assets are benchmarked overall to the Russell U.S. indexes. The Russell 2000 is a widely tracked U.S. small cap index with 1.6 trillion total benchmarked. So absolutely a big day for Russell U.S. indexes in 2020. Combined across NYSE and NASDAQ, 125 billion traded across the two exchanges at the close, actually. So we announced on March 1st that rank day is May 7th. So what this rank day is that's the day for all the company filings to be effective for our review teams to look at in order to determine eligibility into the indexes. So the first recon membership announcements will post on June 4th, and then followed by a query period, and then reconstitution is final after the close of June 25th. So looking forward to another exciting recon season, and I'm sure Sean will be excited to talk more about it when he's back.
Oh, he will. Don't worry. You can't shut him up about recon when it comes time here. Catherine, he wants to talk nothing but recon. But you guys have more up your sleeve of late out there in FTSE Russell land. In fact, just this week, On the 1st, we saw the launch of a new, shall we say, a bite-sized version of the Russell 2000 option. I know it's only been a few trading days, but seems like demand is hot for all things Russell 2000 options out there right now, Catherine. So do you have any updates you can share with our audience how that's been going so far?
Yes, that's right. MRUT, as I believe it's called, the CBOE Mini Russell 2000 Index options, just opened trading this week. So obviously Sean's the expert here, but I got a download from him, so I'll just kind of go over the highlights. This contract is the equivalent in size to options that trade on the Russell 2000 ETF. It's 1/10 of the existing Russell contract that trades on the CBOE and continues to trade. The notional value for the mini is, for example, 22,000 versus a larger contract of 220,000. So it's bite size, as you say. But more than 5 market makers are already providing liquidity. It's cash settled European style, so no early exercise before expiration. And, there's also the feature that there are weekly options on the mini, Monday, Wednesday, Friday expiration. People like weekly options for volatility harvesting, both institutional and retail. And what's really exciting is that because of the much smaller contract size, our client base for the options has expanded to retail. So wealth, and, across retail, wealth, fund, hedge funds, they can hedge the book down to the penny. New retail clients we're seeing because of the increase in individual investors and traders out there. So that with the smaller contract sizes, these retail individual traders will feel more comfortable trading them. Then also one more benefit that, everyone should actually check with their financial advisors for their, benefit for themselves. But I understand most derivatives traders who trade futures benefit also from the 60/40 capital gains tax treatment. So that's the rundown, and very excited again about the new mini options, and we're already seeing good traction with it.
I was pretty certain when we announced those that it seems to fit into a lot of trends that are moving in your favor right now. Bite size, everyone wants bite size, and everyone wants Russell 2000 right now. So you make a smaller bite size contract aimed at that audience. I got a feeling it's going to tear it up out there, Catherine. Let's see what's tearing it up right now from an options perspective. Russell 2000 over there at CME. Remember, you guys can generate these reports for yourselves completely for free anytime, day or night. Doesn't matter. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. If you want to pull up Russell 2000, you can follow along with this one right now. You see coming into this portion of the show, Russell 2000 at about a 21.5, puts it down about 2.25% or so on the week. The most action this week, 34.5% coming in that March contract, has about 15 days to go. So right outside our frame of reference for analysis here. The vol out here in the March contract is about a 36.25, so slightly below. Remember that RBX, it's a predominantly front month calculation. It's a 30-day calculation. We're a little bit beyond that here. Even though we do have only 15 days to go. So it is pretty close here, but we've got a 36.25 ticking up to about 2.75 points there on the week. In terms of skew, we've got the puts last week. They were 14% rich. This week, 16%. So puts getting bid up a little bit out there. Seen a little bit of a sell-off, not exactly surprising. And then the calls, 12% cheap last week. This week, 15.2% cheap. So calls coming in, puts getting bid up. Not exactly surprising out there. Let's see what the most active. I said the most active month was the March contract out here, but actually the most active contract for trading this week in terms of, calls or puts, what we had out there was actually the 1800 put here in June, doing about 1600 contracts out here on Wednesday, and pretty much all that closing. So someone looks like taking off some 1800 puts here this week, which is kind of interesting. I expected it to be more action in the calls, but it was a little bit longer term. And on the put side of the fence, which is kind of reminiscent of the kind of paper we used to see prior to November out there in the Russell 2000, when it was kind of all longer term puts all the time. Either way, a pretty active week yet again out here in the Russell 2000. We can probably talk equity, volatility, all the rest of the show, but we got some other complexes that want to squeeze in. Don't worry, Catherine, we got some listener questions coming up for you in a little bit as well. So stay tuned there while we keep on rolling. Our movers and shakers was kind of all over the place this week, listeners. We had a dash of energy, a dash of actually a heavy dose of metals, and then a little bit of ags as well. We haven't talked ags in a while, so I might actually take our journey next out there into the ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
In particular, listeners, we were talking about all things wheat here on the show. So, and wheat was off 3.35%. It was number 5 to the dark side this week. And I know we haven't had a chance, like I said, to feature a lot of ags on the show here of late. So whenever they pop into our movers and shakers report, I like to shine a little bit of light on them. The good old, remember, you want to find this for yourselves, go to the drop down, go to ags, and go to grains and oil seeds, and you'll find the SRW wheat. That's where we're looking. That's the more active of the contracts there. 651 even coming into showtime in that front contract out there. For those of you who don't follow the old wheat day today, in terms of where the action was out here, it was actually in the April contract, 50.8%, more than half of the volume going up here in this April contract. By the way, if you're wondering how much paper wheat does here, about almost 50,000 contracts this week, 46,700 and change out there. So a fairly active contract, no euro dollars, but it's also not, shall we say, a lean hogs or something like that, or a class 3 milk, even though those are starting to do more paper out there as well. So we'll hang our hat out in April from a vol perspective. At the money vol, it's a fairly volatile contract. It's at about a 27, listeners, even though it's off about 2.1 points this week. Skew-wise, the puts last week, 2.8% rich. This week, 5.7% cheap. Remember, I broke it down on the show a couple of weeks ago, listeners. When that letter is capital, that means it's a premium, their bid. When that letter is lowercase, in this case, the P, then that means they are cheaper. That's how you can tell that at a glance, looking at that skew report. So the big swing in the puts here, calls last week, 1.4% rich. This week, 1.8% rich. So calls a little bit big. Looks like most of the action was in the put. So let's see what was afoot out here this week, listeners. Actually, the most active contract, the biggest trade out here this week, was the 700 calls in the April contract, doing 1,751, about 1,000 on Monday, the rest scattered throughout the week, almost all that opening. So opening upside calls in the April contract, but that was not enough to lead the dance out here and really change the skew that much. Like I said, there was a big skew change on the puts. Let's look at the put side and see what was going on. Actually, the second most active contract was 1,700 of the 680 calls, and then you got 660 calls. So it's a whole call strip, 1 to 3. You got to go down to number 4 to find the really first sizable put trade. That was the 620 puts, also in April, doing 1,423, 1,053 of that coming on Monday. Decently opening. So most of that opening on Monday, the rest kind of scattered throughout the week. So I'm going to go out on a limb and say, let's see, perhaps here, given what we saw from a skew perspective, someone perhaps drawing a bit of a line in the sand there on that 620 put strike, selling a few of those there, because that skew came in pretty aggressively out there. Also saw 645 puts, a little bit closer to the money, trading about 1,100 times. The lion's share on Tuesday, 628, also opening there as well. So maybe some opening selling paper on the 645 and 620 strike. Either way, someone was crushing that put skew here in April. In everything SRW wheat, looking for any other aberrant trades on the tape. A little bit longer term. If we go out to July, we see 820 calls. Like I said, we're at a 651 right now, listeners. So 820 calls, a fairly optimistic call in July. 1,132 of those trading this week as well. Let's see if we can see what was up with those. 1,020 traded on Tuesday, almost all of that closing. Looks like 1,002 of the 740s and 1,000. Looks like a funky four-way, listeners. We had 740, 760s, 840s, and 820s, all trading about 1,000 contracts. Looks like there was a four-leg, maybe it's hard to even an iron fly. It's it's weird because it's all out of the money at this point. Usually something like an iron fly or an iron condor in this case would be around the at the money. That's not what we're seeing here. But interesting stuff nonetheless here. Four-legged. Let's run those strikes down again. 740, 760, 820, 840, all 1,000 as well. So it's like a strip. It's not really any sort of ratio like you would see maybe with a fly or something like that. So interesting stuff afoot here. A four-way upside trade here in the July contract here in the wheat. And that's accounting for a decent amount of the paper, but not enough. Only 17.1% went up in July. 51% went up here in April. So that's where the action was this week. Moving on with our story here. There also was a lot of action out here in the metals this week, listeners. Maybe we'll hang our hat out there next. A little bit of the old metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, let's get to it. Let's talk some metals. Silver, number one to the dark side. This was a hot one not that long ago. It was part of the whole meme stock / squeeze palooza, which is still going on right now. GameStop, AMC, and Rocket all moving pretty aggressively today. Silver was kind of the short squeeze that wasn't. If you listen to this show, some of the other shows on this network, we kind of talked about the silver market, a different beast than, shall we say, a heavily shorted, illiquid, small float name like GameStop. Not quite the same beast in the silver market, a little bit different. So that short squeeze never really materialized. It seems like the sell-off is materializing this week. Like we said, off about 6%, almost 5.87% from our show last week, and about 3.75% so far this week. That's where we find ourselves in silver. By the way, if you're wondering how much paper silver does, about 33,000 contracts on the tape this week. So a fairly liquid, fairly active contract. Again, it's not even as much as gold, but it's a fairly active contract, probably number 2 out there in the metal space. Even though copper's getting up, you'll have to pull up the copper numbers to do a compare and contrast. But right now, we're looking at, let's see, that front contract silver about a 25.45 coming into showtime, off about 3.75, or almost exactly 1 point here on the week so far. The most active contract, again, going out to April. 54% of that 32,000 contracts going up in April. So that's where we're hanging our hat. That contract has about 21 days to go. The vol out there, if you're wondering, coming in a little bit, 38.20. So still frothy, almost 40, but it's off about 2.5 points this week. Skew-wise, we're seeing the puts were 3.5% cheap last week. This week, about 1.8% cheap. So puts getting a little bit more bid, but not a ton. Calls are where the action actually is. Calls 4.3% rich last week, 10.4% rich this week, listeners. So calls getting a hefty bid. Let's see if we can unpack that here. The most active contract out here, like I said, the most of the paper, 50%, 54% actually, was in the April expiration cycle. The most active contract here this week was the 33 call. So that's probably where we're seeing some of that call action out here, doing 2,113 contracts, pretty much scattered throughout the week. The biggest day was Monday, 1,511. Almost a good chunk of that was closing, though, on Monday and Tuesday and Wednesday. So closing paper on the 33 strike. That's kind of interesting. So maybe some folks buying back some shorts to fuel that big increase we saw in the calls. Interesting stuff. We also saw the 25 even puts, which are about at the money puts now, going up 1,824 times this week. The lion's share yesterday, 500 and about 400 on Monday. Both slightly closing on those as well, but it was back and forth throughout the week. So not a huge OI change from that perspective there. Then we go back to the 24 puts, a little bit out of the money. Those are about 1,600. The lion's share on Tuesday, about half of them, and most of that was opening. Still, I'm not seeing a big explanation for why these call wing is getting so big. The 28 calls were also pretty active. They were 1,160 going up this week. The most active actually was today, 463. So the rest of the week was kind of scattered and not hugely biased in one direction, opening or closing either. So interesting stuff afoot. I mean, obviously moving down the skew a little bit, you can see the call wing get a little bit of a bid usually anyway, but not this aggressively. So that kind of makes it fascinating. Let's go a little bit farther out because the metals, a lot of the story in the metals, listeners, is longer term. That's certainly the case in gold, where we see just huge prints and usually flies going up to the upside in some, shall we say, funky upside ratios and flies. Not seeing that so much here in silver this week. Looks like the most funky, quote unquote, to the upside action we're seeing are the 50 calls going up nearly 1,000 times here in July. That's kind of it. 50 calls, that'd be a pretty aggressive clip, listener. That's pretty much doubling silver between now and July. So that would be impressive nonetheless. Copper was also moving really quick. Let's do a quick comparison. We talked about copper not too long ago on the show. Copper has been in the headlines a lot of late. It's a big mover, big driver. Let's see exactly how much paper we're talking about here. Like we said, we just talked about the numbers for silver. So copper not quite there yet, but it's getting close. 17,000 contracts on the tape so far this week. Copper at about 393, so coming off some of its recent lofty around 8+ year highs it hit not too long ago. Again, check out that interesting report Eric did over there at CME for a lot of research into what's been going on in copper pricing and demand and volatility and everything else out there. Of that 17,000 and change contracts, the lion's share, 39.7%, coming in the June contract that has 81, almost 82 days to go. The vol out there about 33.5, up about 2.25 points. Let's see, skew-wise, a decent change this week. The puts were 2.2% rich last week. This week, 0.5% cheap, so they've swung almost 3 points. And the calls, about 0.5% bid last week. This week, 3.6% bid, so a 3-point swing on the calls there as well. In terms of the most active contract, like I said, we're at about a 394, but it was the 5 even calls in June that were dominating the tape. Of that 17,000 contracts, 1,700 came in these 5 calls. It went up all today. So someone's got a huge axe to grind for 5 calls, 1,700 times on the 5 strike here, as well as like the 4 halves trading today as well, 1,100 times, and the 5 halves, 600 times. So bit of could be a weird ratio there, 4 half, 5 half, with the 5 calls coming in as the kind of guts of the fly there. But either way, the 1,700 of the 5 calls dominating the tape out here in June. In copper, let's go a little bit farther out as well, because that's where the story often is metals. Dees, 5.25, a lot of 5 strike action, which again, we're at a 393 right now, listeners. So that would be a pretty aggressive move. Looks like another funky verticals going up here. We have action on the 5 quarter calls in Dees here for 1,000 of those today. 4 3/4 calls, 500. 5 3/4 calls, also 500. 5 half calls, 400. 200 of the 5 calls and 200 of the 6 calls, all going up in Dees. All of that today. So we have no idea what's going on from an OI perspective. Wow, that's a hefty strip going up there as well. So upside action seems to be what's going on. Let's look at the skew really quickly here in Dees. Yeah, the call skew in Dees has gone from a 4% rich to an 8.5% rich. So it does seem like there's some net upside buying. Either way, 5 and 5/4 are where the action is out here.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
You know, there was RBOB on the tape here from a movers and shakers movement. But of course, we had OPEC going off out there today. The Saudis perhaps, maybe surprising some folks, saying they're perhaps not going to take the action that some folks were expecting for them out there. So let's see how that's lining up out there. And I know a lot of you are a favorite out there these days. This is WTI. Again, RBOB, not the biggest, most active contract from a overall options perspective, even though it was up 4.11% this week and was up 5% last week and was number 2 on our movers and shakers. Let's go out to WTI, give you a sense of frame of reference here. WTI doing almost 700,000 contracts this week. So a very active contract out here. We're coming into showtime. We're at about 64.07. So again, it wasn't that long ago, listeners. We were threatening that 40 handle to the dark side. Can we break it? Can we maintain north of the 40 handle? Yeah, we have. And now it's up to 64 here, up 4.18% or about 2.5 points just this week so far. If you're wondering where the action was out here in WTI, it was the April contract. It's got about 13 days to go. So it's right at our 2-week window. So we'll let it slide in because it did 36.8% of the paper out here this week. So that nearly 700,000 contracts, 36.8% of them coming in this April contract. The vol out here about 35.5. That's off almost 6 points. Looks like about 5.99 points here. So vol coming in a little bit. Again, not surprising. We had the event today, and there's a lot of event risk baked into this contract. Once you have the event, the vol usually comes in, unless there's some sort of aberrant surprise going on out there. Skew-wise, we saw the puts last week, 2.2% rich. This is interesting, listener. This week, getting a hefty bid, 10.5% rich out here. So hefty swing towards the puts here in the April contract of WTI. Looking at the calls were effectively even with the at the money last week, which is kind of interesting. This week, calls have come in quite a bit, 6.8% cheap this week. So calls coming in, puts getting bid as we're continuing to rally here in WTI. The most active options contract this week. April was the most active expiration cycle. Most active options contract, the hot trade out here this week. Looks like it was a close tie. It was a 58 puts, in April, but also the 30 puts, just barely eking them out in July, doing 21,988 contracts for taking the number one spot. Listen, actually, it looks like it's a bit of a vertical because the 30 puts and the 40 puts in July are lighting it up to the tune of 21,900 of the 30 puts, and actually about the exact same number, 21,900, also going up today of the 40 puts. So obviously a bit of a 40-30 put vertical going up 21,900 times today with, exactly that amount here. And all obviously went up today, so we don't know the OI changes. Those strikes not really trading the rest of the week, so it's pretty much all today. So that's kind of taking the number one and number two spots ever so briefly. It's fighting it out. By the way, July did 10.5% of the paper. I'm guessing all of that coming in those two prints, not much else going on. Even though the 70 calls did do about 11,000 contracts this week as well. So it's not nothing, but it's not as aggressive as the 58 puts, which were right behind that put spread we were just talking about, doing 21,386 contracts for the number three trade out here in WTI this week. And that was a little bit more even. 10,500 coming today, 8,000 yesterday, and the rest kind of scattered throughout the week. Yesterday was obviously slightly closing. Today, we don't have the numbers for it because it just happened. And we're still waiting for the OI to update out there. Let's see if any other interesting prints that are coming across our radar out here in WTI. So a lot of put action, listener, which again, maybe not that surprising given that we are at some, shall we say, lofty levels out here in all things WTI. Beyond the July contract, 30 puts also active here in September, going up about 12, almost 13,000 times this week. So a lot of downside put action if you are so inclined to. I know a lot of you like watching the skew out here in WTI to see what it bodes for the future of the product. And it seemed like a lot of puts on the docket this week. 60 calls also active. You go a little bit farther out down there in Dees, doing about 8,000 contracts, almost all of that coming today. So it's not all puts all the time, but there is a lot of put action on the tape here. Looks like we got a little bit farther out. Dees of 2022, if you want to get pretty bullish, listeners, the 80 calls also trading about 5,000 times here this week. So a bit of a smattering, but it's mostly near-term puts leading the dance out here this week, which is kind of interesting. A lot of you may be watching that 60 strike. Can we maintain it? Can we hold it? The put paper out here may make you inclined to think that perhaps we cannot, but interesting stuff afoot here when we're talking about energy. There's always interesting stuff afoot as well when we bring the listeners onto the show. So without further ado, let's bring on a little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's do it. Let's dive into your questions. Catherine, we got a couple right up your alley here. Let's kick it off in equities land. The first one comes from Nintz. Nintz wants to know, has the recent volatility of rut stocks prompted any changes or tweaks to the reconstitution process? So this is something we get a lot, Catherine. People want to know. They wanted to know a lot during the height of the pandemic last year, whether you guys were thinking about changing the process. The short answer to that was no. But now it looks like they're asking about, given the recent swings, recent movement, recent rally in Russell 2000, Catherine, and the volatility that has ensued. Nintz wants to know, has that caused you to make any changes or tweaks to the recon process?
The short answer again is no. So as you mentioned last year, similar questions were raised around the, reconstitution process. Were we going to move forward with the process as scheduled? Our policy team actually sought feedback from the market, clients, and the determination was made at that point to proceed as normal with the June reconstitution process. So as of now, no changes have been announced to the existing process. So until further, until our policy team provides further guidance on that, at this point, no, there are no changes.
All right, another one up here for you here, Catherine. This comes from Albert. He wants to know, I like the idea Oh, he's jumping on this trend. A lot of people have been asking about this lately. He says, I like the idea about the Russell Microcap Index futures and options. Is this something that could happen? Catherine, our audience seems to have really gravitated around this idea. I think Sean floated a few weeks ago talking about taking the Russell 2000 and obviously chopping out the bottom half, the bottom 1,000 of the Russell 2000, if you will, aka the micro caps. And we were talking about that on the show. It seemed like a lot of our listeners were really excited by that because we've had a lot of questions since then about this. In particular, Albert wants to know, Catherine, are you have any plans? Are you hearing any whispers or rumors about potentially some sort of Russell micro cap futures or options in the near future, Catherine?
That would be probably a question better directed to our exchange partners, CME, CBOE. But I certainly think that's a great idea. And if there's a market for it, certainly something hopefully Sean is discussing with the exchange partners that we work with. Now, in terms of the microcap, yes, it has been getting a lot of interest. And just a reminder of the methodology and the modularity of our indexes, the bottom 1,000 stocks plus any additional that go beyond the Russell 3000 are included in the microcap index. I just wanted to drop in that reminder.
There you go. What was it, Albert? So no plans on the radar, but it sounds like if all these questions we're getting about it are any indicator, maybe something will be afoot sometime in the future. So stay tuned for that because you're right. It sounds like people have an appetite for all things small cap right now. So if you can offer them more, then I think they'll be excited about that. Let's see. Next up, we've got Noob. Noob wants to know, hi, how can I judge liquidity, open interest / volume of options on futures? I've just been blindly placing an order and seeing if I get filled. Ooh, that's not good. Usually I can't get filled with a market order. Does that mean 0 people are trading this option? I find it hard to believe. I've been trying with options on futures for the CME Japanese yen. All right. Well, Noob, you came to the right place. Let me say that first off, because the TWIFO reports that we create for this show are pretty much one of the best and certainly the best free resource you guys can get your hands on to actually figure this information out for yourself. So whatever product you want, in this case, Japanese yen, you can go in here to the drop down, cmegroup.com/TWIFO or /TWIO. Go to the FX, go to the majors and go to yen dollar. That's where we are right now. And pull the drop down. You can see for yourself exactly how much paper and what's going up in this product over the course of this past week, or you could even change the dates and go back farther if you like. So that's where your starting point should be, Noob, and everyone else who's looking at trading a new product over there at CME for the first time. Pull up the TWIFO report and see what's going on out there. What is a liquidity situation? What is trading out there? In this case, he's asking about yen, so let's do a little bit of the homework for him. By the way, yen fairly active out there right now. 32, almost 33,000 contracts on the tape for yen. That's a little bit more than you might expect out there. So yen doing some paper. It's off about 1.2% this week. The front contract at a 0.009277. Say that 5 times fast out there. So the yen, it's not exactly an illiquid contract here, Noob. So it might be interesting to know more about exactly what you're trading, what your strategy is. You say you're putting market orders in. First off, just blindly placing an order, seeing if you get filled is not a good approach. You want to look at these reports first, see where the action is. In this case, 50% of the paper is going up in that March contract that has, 3/4 of a day left to go. So if you want to trade very, very near term of that, let's see, what did we say? 32,000. So half of that going up and is going out pretty much in about a day. So if you want to trade a lot of paper, that front contract is where you're going to have to hang your hat. Other than that, let's see. Let's find another month. 33% went up out here, though, in the weekly April contract that has 35 days to go. So you can go out there and get some paper filled. But again, if you're putting market orders, I don't know what you're doing. You could be doing a iron condor ratio swap for all I know, in which case, yeah, it's hard to get filled. If you're trying to lift an offer and hit a bid, then you shouldn't really be having problems. If you're trying to work stuff a little bit more aggressively, maybe that's also why you're not getting filled. So hit us up with that. But either way, if you have a similar question to Noob out there, listeners, in terms of is a product liquid or not, pull up the TWIFO report. It will tell you how much paper is trading, what is trading, where the most active concentrations of that liquidity are. So you can start planning out a strategy that might make sense. If a contract or a product does 80 contracts a week, you're probably going to have the same issue that Noob here is running into. You can't get filled, and nothing's going to really change that. But in something that's 33,000 contracts, if you're trading something that's decently liquid, one of the months that has some activity, you're trading near the money in some capacity, you probably should be getting filled. So maybe you're up to something else, Noob. So send us in more details about what exactly you're trying to trade, and maybe we could help walk you through that. Similar question coming in here from Little John. Little John wants to know, again, a product that we've talked about a lot on our movers and shakers reports of late, but not so much from an options perspective. Little John wants to know, how is the lumber market so inactive with the price activity of the future? I'm assuming you were referring to the lumber options market, and you are correct, John. Let's pull it up. You can find it for yourselves, listeners. Go into the ags and then the softs, and you'll find lumber right there. Lumber at an 861 right now. So it has gotten very frothy out there in the lumber space. In fact, we're hearing reports coming out of some areas, particularly in the southeast, it seems like, where some of the home builders are actually putting a halt to new constructions because lumber has moved so much. By the time they sell the house and actually build it, the price has increased and they're actually losing money on the houses out there. So lumber has been something interesting to watch of late. And you're right, Little John. It is not an active contract. It did 89 options contracts this week. So from an options perspective, this is kind of what Noob was alluding to with the earlier question. If you put an order out here, you're not really going to get filled. The lion's share of that, 57.3% of that 89 contracts coming in the April contract that has 29 days to go. And it was the 950 calls are the most active contracts. So these are $90 or so out of the money. So yeah, this is one of these ones that for whatever reason is only 4 months out here to begin with. So it's not that many choices from a month and liquidity perspective. And on top of that, it does seem like the lion's share of the customers out here, for whatever reason, they get what they need from the futures market. The futures move, the futures trade. Part of that is maybe lumber is just not really that palatable of a product to the retail audience who tends to contribute and drive up a lot of the options paper, particularly for a show like this. But also it just seems like a lot of the users of the lumber contract are in the industrial capacity, the end users, the producers of lumber. And so they're using the future for that purpose. And they're not hedging with the options. They don't see the need for it. Either way, these industrial contracts, if the use case is being met for that industry by the future, then they don't seem to be very inclined to dive into the options. This is one we've been watching for a while, and it has been on our movers and shakers almost every week for the better part of the last few months. And yet, for whatever reason, that has not translated into any options paper. And I'm sad to say, Little John, that is the case yet again. No, no paper here in the lumber market. All right. Unfortunately, that music means we've come to the end of yet another sojourn through the world of futures options. I mean, it doesn't mean we don't watch these markets. Listen, we'll keep an eye on lumber and everything else, and we hope it will translate in something more you can trade that is more liquid. I hope maybe some of the big institutions will start actually hedging with the options or speculating with the options, and that will drive a little bit of income against the futures with the options. Either way, something has to kick off on the institutional side first to start driving some liquidity, which then will hopefully translate into more action on the options, which will mean more retail players can play it. But for now, it's kind of a wait and see side on the options front. Unfortunately, that music means we're out of our time for waiting and seeing on this episode of TWIFO. But before we go, Catherine, if our listeners are intrigued by the mini Russell options or by the Russell microcap, which sounds like they're very interested in, or about Russell Recon, or about the changes with the IPOs, or anything else you folks are cooking up over there in FTSE Russell land, Catherine, where should they go? What should they do?
Yeah, well, the latest information is always, the public information is on FTSERussell.com. And certainly we are open to, listening to the feedback and enhancing our product. So again, I mentioned earlier, the Russell US 40 Act daily capped indexes were launched based on client feedback, indicating demand for this type of index. So clearly we can look at, doing additional indexes based on the core Russell 2000 indexes. And we are actually planning on continuing to enhance the product. I mentioned the sectors and industries earlier. We move the Russell indexes to the new ICD framework in September. And then we're also looking to launch a set of, standard off the shelf like X tobacco or X energy, X oil, coal and gas indexes, just so the clients can have those off the shelf if they want to exclude some of those sectors that, they want to take out of their index. So more to come. Again, FTSERussell.com and then info@FTSERussell.com is our, client service email. And as you say, like Sean is always connected with our exchange partners. So great to hear the feedback.
There you go. FTSE Russell, FTSE Russell.com is the place to go. Give me a follow on the old Twitters as well at FTSE Russell for all that data coming out in between episodes of this fine program. We already know where to go to find out all the data we're talking about here. CMEgroup.com/TWIFO or /TWIO is the place to go for all this data on any product. Lumber, Japanese yen, whatever the heck is trading over there, perhaps not trading at CME. You can sink your teeth into it on that link. Of course, check out the Fed Watch over there as well. It has been moving a late. I know Russell mentioned on the show last week. The levels are about the same this week in terms of what they're pricing in for future rate hikes. By the way, the countdown is 12 days till the next Fed meeting, so we're coming up at it. Not much really being priced in for the next meeting, but from April and beyond, all the way to the end of the year, it's about the same probability, about 4.1%, which is up substantially over the last week or so. So interesting stuff afoot out there in the Fed Watch. Getting a little bit more active out there. Maybe keep an eye on it. CMEgroup.com. Just type in the Fed Watch and you're off to the races. And on behalf of everybody over there at CME and everybody over there in the FTSE Russell land and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in those questions. Keep them coming. Remember, we're back again tomorrow, noon Central, 1 p.m. Eastern, to talk all things volatility on Volatility Views. We kick it all off again on Monday with the option block all the way through to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.